Hi, my name's Gary Edwards. I'm very privileged to be the founder and CEO of AAM Investment Group. AAM is a specialist investor in agricultural opportunities right across regional Australia. And I'm here today to speak to you about our Diversified Agricultural Fund. So fundamentally, AAM is a business that exclusively focuses on investing in regional and rural Australia. We are an owner-operator model, or invest under an owner-operator model. We find diverse assets in different geographic locations that tend to be across multiple commodity supply chains that we seek to accumulate and operate at scale to extract the additional cash flows and efficiencies that you can get in investing in regional Australia. So today, the total assets under management inside the AAM portfolio is approximately $1 billion. That's reached that target in just over 5 years, and really around that strategy of diverse investment. We employ across the assets and across our entire business around about 500 staff. As you can imagine, we're very, very heavily invested in getting people in regional communities that are living and working on these different assets. And the skills that we can attract to that really bring a difference as to how we can operate those assets in a much more active and integrated manner. There's 32 different sites right across Australia, from the Northern Territory to Queensland, New South Wales and South Australia at present. We're very actively looking at opportunities in both Western Australia and Victoria, because the whole principle of what we're trying to do here is around the investment in and the risk managed returns you get from investing in different geographic locations. So if we look at what the opportunity set is, fundamentally there's a huge opportunity around the need for succession planning and what is very traditionally family owned and operated businesses. The average decision maker in an agricultural business or enterprise these days is 63 years of age. And to have an average that high means that there's a lot of people in their 70s and 80s that are still attempting to very actively manage and operate these businesses and these assets. What comes with that, though, is a great opportunity in that often those assets have been under-capitally invested for a number of years, as the people that are owning the assets and the businesses tend to take a more conservative capital approach. Now, if you look at what's going on in the ANZ Greener Pastures 2 report, has identified that there's at least $600 billion worth of capital required to facilitate the integration of succession planning that needs to happen to provide the capital to facilitate these families moving on, and divesting their assets and looking at how we replace the capital structure across a very broad agricultural portfolio. The entire industry is approaching a $100 billion industry. And if we look at that, it's the second largest export from an Australian domestic economic sense. But there's huge opportunities in the sense that Australia is a inhabited landmass, but we are far from a capitally developed or fully invested landmass, unlike most of the parts of North America and Europe. So we're seeing lots of opportunity, which is why there's a lot of that funding coming from those markets seeking to get investment opportunities here also. So what is the opportunity? The opportunity is really around getting access to accumulate highly productive, often high quality assets that have been in family businesses or family structures for many decades, in some cases for many generations. When you operate in multiple production regions, you take away a number of or at least provides the ability to manage a number of the key risks that are traditionally linked to agricultural investments. Different weather events, whether there's too much rain or too little rain. If you're in different locations, you can essentially manage that and take advantage of a lot of the opportunities that sit within pricing arbitrages within the domestic market. There's having multiple diversified income streams. So a key approach of what we're doing inside the Diversified Fund is investing in multiple sectors. So beef cattle production, sheep production, poultry production, cropping, and also sustainable softwood timber processing. So having those diversified income streams really give us a significant advantage in being able to provide positive operating cash flows in the form of distributions to investors on a quarterly basis. Access to capital and operating at scale are important, and having highly efficient developed farming practices really means that you can often generate a lot more positive cash flow than what's been coming out of these assets traditionally. So building scale, how do we deal with that? The diversification of how we gives us the opportunity about managing risk, a very active management strategy in regards to how we use technology and data. The owner-operator model extracts all of the returns and provides them back to investors rather than just simply an investment in the property. And there's a significant amount of resilience comes from the diversification of income streams. Commodities in agriculture are positively aligned to inflation. So what we're seeing at the moment is a great way to see prices improve, and cash flow within these business often increases during these periods of time. So if we see that the key factors being the drivers of sustainable growth being scale, being investment in capital improvements, and a high adoption of technology. There's so much can be done in sustainable investment that unlocks productivity in deploying capital on these assets that may have been deprived for 10 to 20 years, gives an immediate return in capital growth and the underlying distributions that come out of the positive operating cash flows. So sustainability is great business in agriculture, whether it's investing in safety and automation with our people, whether it's investing in adopting internet connectivity that's unlocking so much potential about how we use different systems, water monitoring systems and farming techniques, but also how we take value-adding waste streams, how we take what is a waste stream that may have been once an expense. At scale, you can accumulate that and convert it into a highly valued fertilisers that interface in different parts of businesses. So there's so much opportunity to take and change the way that these very traditional businesses have been operated. So if we look, as I mentioned, the Diversified Fund is across those 5 key sectors of poultry production, cattle production, sheep production, cropping, and the sustainable timber processing. The portfolio, as I mentioned, covers right around the country, and we hope to have some investments in Western Australia and Victoria shortly, just to complete that out. And it's really investing in diversified supply chains. So that's critical so that we get enough scale to ensure that we're a price influencer, not a price taker within these markets. What we've seen, obviously, over the life of this fund is a total return of around about 13.5%, where approximately half of that comes in capital growth and half of that comes in the form of yield and distributions and franking credits. So what many people find is that's much higher than they would traditionally expect. That's delivered through that diversification and those different commodity income supply chains. And it's something that we believe is highly achievable into the future. This is something that we've done for more than 20 years, and having that diversification continues to drive that opportunity. So thank you very much for your time today. Anyone looking to get in contact with AAM, the email's there on the screen. It's invest@aamig.com.au. Thank you very much, and I hope you become an investor at some point in time in the future.